Retirement may seem like a lifetime away, but the best time to actually get started for retirement is right now, and the stock market can be the best way to do that. Now, stocks might seem like you're never going to invest and it can be hard to actually get into the market, but it is a lot simpler than you think. And although I am an amateur and have only just recently started to get into the stock market, it has been, it has been a learning experience and has been a great journey. In the next few moments, I will talk about what the stock market is, some of the advantages to the stock market, the disadvantages, and finally some ways to minimize risk while in the stock market. First off, what is the stock market? According to John M. Dalton's book, How the Stock Market Works, he describes stocks as pieces of a company that the business will sell to finance certain projects or the business themselves. And then these stocks or shares of a company can be bought and sold at various prices. And after that, you might be thinking it'll be very hard to actually get involved in the stock market, but now it's actually easier than ever. You don't need a broker at all to actually get into the stock market. You can easily download an app on your phone to get started. Some apps include Robinhood and Webull, both of which I am involved in. Now that we've kind of talked about what the stock market is, let's look through some of the advantages of the stock market. According to Kimberly Amedo in her article, Benefits of Investing in Stocks versus Disadvantages, one of the greatest benefits is that you can take advantage of a growing economy. Now, from the year 2010 to 2020, we went through a 10-year period of slow but economic growth, in which a lot of people's stocks went up. And this can be a great time to invest because it's an easy and nice time to actually make money over the long term for your investments. The next benefit of a stock market is the fact that on average stocks grow at about 10% a year, and inflation here in America is approximately 3% a year. So not only would you be beating inflation, but you would be far exceeding inflation. To put this in an example, if you were to put $1,000 into your savings deposit, the value of that money would drop by about 3%. But if you were to put that into the stock market, on average it would grow to about $1,100. The next benefit of the stock market is it is easy to liquidize your stocks or shares. In other words, you could easily go from having and owning shares of a company to actually having money. So it is easy to liquidize them. And the final benefit of the stock market is some stocks actually do dividends, which are essentially money that the company gives you just for owning a share in their company. And this is the way that a lot of people set up their retirements, is that they live off of these dividends that companies give to you just for owning their company. Now that we've talked about the advantages of the stock market, what are some of the disadvantages or the drawbacks of the stock market? According to Amedio, just as easily as you can gain money, you can also lose money in the stock market. So you can go through a recession like we are currently going through in the COVID-19 recession. And through this, some stock prices like airlines went down by over 70%. So a lot of people lost a lot of money. The next drawback to the stock market, as Michael Reagan puts it in Markets Are Stumped, is that they can take a long time to actually recover from these recessions. At the beginning of the COVID recession, people thought it would be a very quick recovery, or it would be V-shaped. But now people believe that it will be a longer, more drawn-out recovery that's more in the shape of a U. And finally, the last drawback, as Amedio puts it, is emotions, is that your emotions can hold you back from becoming a good investor. And the best way to put this is that if a stock price goes down, you will feel the need to sell that company. That way you don't experience as much losses as you potentially could, when most of the time it is best to actually hold on to that company and stick with it through thick or thin, and eventually that stock will go up in price and you will be making money again. So now that we've talked about some of the disadvantages of the stock market, what are some of the ways to minimize risk in the stock market? According to the article Knowledge of Stock Market Key to Investing and Preparing for Retirement, they define the term diversify as spreading out your money into different stocks and markets. And this is key to actually reducing the risk of losing money. So don't just invest in Boeing, because if you did, then as Boeing went up, well, you would make money. But as Boeing went down, you would lose a lot of money. And if Boeing happened to be a bad company to invest in, you would end up losing a lot of money there. So invest in more than just one company. And on top of that, as Amedio puts it, invest in different types of markets. Invest in more than just the airlines. Also invest into oil, the hotel chain market, as well as cruise line and real estate markets, just to name a few. And by doing this, when one of those markets might go down for any reason or cause, that won't hurt you or your investment as much. And the other markets can hold and support you through that. And the next thing to help you out with investing is to make sure to keep track of your emotions and always stick through with the stocks that you originally bought. In the past few moments, we talked about how the stock market works, some of the advantages to the stock market, disadvantages, and ways to reduce risk in the stock market. Now, hopefully you think about investing and this might become a part of your life. For stocks shouldn't just be for the rich people to get richer. They should also be for the common people to make some money on the side. Thank you.
Good job. Were you asleep?